Hey everyone, welcome back to our series on the trading profession. Today, we're diving into something absolutely crucial, something that separates the consistently profitable traders from those who are just gambling. We're talking about the rules of the game in trading. Now, I know what you might be thinking. Rules. Isn't trading all about freedom and making your own decisions? And you're right, it is. But true freedom in trading doesn't come from chaos. It comes from discipline. It comes from having a robust, well-defined set of rules that guide your every move. Think of it like this. Every professional sport has a rule book. Can you imagine a football game without rules? It would be pure chaos. The rules provide the structure that allows skill and strategy to shine. Trading is no different. Your trading rules are your personal rule book, designed to protect your capital, manage your emotions, and keep you in the game for the long haul. So, what kind of rules are we talking about? Let's break it down into a few key categories. The first and most important is risk management. This is non-negotiable. A core rule here could be the 1% rule. This means you will never risk more than 1% of your total trading capital on a single trade. If you have a $10,000 account, your maximum loss on any one trade is $100. This rule single-handedly prevents you from blowing up your account with a few bad decisions. It keeps you in the game, even during a losing streak. Another vital risk management rule is defining your stop-loss before you even enter a trade. You must know your exit point if the trade goes against you. No exceptions. No, just wait for it to turn around. Hope is not a strategy. Your stop-loss is your safety net, and you must honor it every single time. Let's move on to the second category, trade entry rules. This is about defining the exact conditions that must be met before you click that buy or sell button. Vague ideas like it looks like it's going up won't cut it. Your entry rules need to be specific and based on your trading strategy. For example, a rule might be, I will only enter a long trade if the price is above the 50-day moving average, the RSI is not overbought, and there is a clear bullish candlestick pattern on the daily chart. See how specific that is. It's a checklist. If all the boxes are ticked, you have a green light to enter the trade. If even one condition isn't met, you stay on the sidelines. This mechanical approach removes a huge amount of emotional decision-making. You're no longer guessing. You're executing a predefined plan. This creates consistency, and consistency, the bedrock of profitable trading. The third category is trade management and exit rules. Getting into a trade is only half the battle. Knowing how to manage it and when to get out is just as important. A common rule is to define your profit target at the same time you set your stop loss. This establishes your risk-to-reward ratio. The next step is actually writing these rules down. Don't just keep them in your head. Open a document or a physical notebook and write them out. Frame them and put them on your desk if you have to. Your trading plan should be a formal document. It should include your overall strategy, your risk management rules, your entry criteria, your exit criteria, and your mindset rules. This document is your business plan. You wouldn't start a business without a plan. So why would you trade without one? This written plan becomes your guide, your mentor, and your boss. It holds you accountable. When you're tempted to break a rule, you can look at your plan and remind yourself of the commitment you made to your trading career. And that brings us to the hardest part, execution and discipline. Having a great set of rules is useless if you don't follow them. This is where most aspiring traders fail. They create a plan, but the moment a trade goes against them, or they see a tempting setup that doesn't quite fit their criteria, they throw the rulebook out the window. Every time you break a rule, you reinforce bad habits and invalidate your entire strategy. You can't know if your strategy works if you aren't applying it consistently. The only way to build the discipline to follow your rules is through practice. Treat it like building a muscle. Start small. Follow your rules religiously on a demo account first. Then, when you go live, start with a very small account. The goal isn't to make $1 million overnight. The goal is to prove to yourself that you can follow your rules for 10, 20, 50 trades in a row without deviation. Finally, your rules are not set in stone forever. They should be reviewed and refined over time. This is where a trading journal comes in. You should have a rule to journal every single trade. Record the setup, your reasons for entry, your entry and exit points, and the outcome. At the end of each week or month, review your journal. Are you following your rules? Are certain rules causing problems? Maybe your stop loss is consistently too tight, or your profit targets are rarely being hit. Your journal provides the data you need to make intelligent adjustments to your rulebook. For example, after reviewing 100 trades, you might notice that trades taken on Friday afternoons are consistently losers. So, you might add a new rule: no new trades after 12 p.m. on Fridays. This process of review and refinement is how you evolve as a trader and optimize your edge in the market. Your rulebook grows with you. To wrap it all up, the rules of the game in trading are the rules you create for yourself. They are born from your strategy, your risk tolerance, and your personality. They are the structure that protects you from your own worst enemy, your undisciplined emotions. Your core rules should cover risk management, trade entry, trade management, and your personal mindset. Write them down, make them visible, and commit to following them with unwavering discipline. Review your performance through a trading journal and refine your rules based on data, not on fear or greed. This is the path to becoming a professional trader. It's not the most exciting part, but it is, without a doubt, the most important. Build your rulebook, respect it, and it will guide you toward consistent profitability. Thanks so much for watching this deep dive into the rules of trading. I hope this gives you a clear framework for building your own trading plan. If you found this helpful, please hit that like button and be sure to subscribe so you don't miss the next video in our series. Let me know in the comments what your number 1 trading rule is. I'd love to hear from you. Until next time, trade smart and trade safe.